Good day. This is the Eye of the Storm podcast with the weekly technical update for the S&P 500 being recorded on Saturday, May the 25th, 2024. I'm going to start here with the SPX, and I'm on the weekly chart. And I'm continuing to update what I presented either a week or 2 weeks ago as the alternate count, but backed that up with the decision to bump it up to preferred gains traction and continues to gain traction as we move forward in what I'm now counting as part of a primary fifth wave. So let me just update that picture then in terms of that from what I basically have done is from the January 2022 highs, those early highs, that I had marked as the completion point for cycle wave 3. And so that put us in a cycle fourth wave correction. And what I basically have done is to go back and drop from that date. So from January of 2022, I've dropped it down a degree. So instead of cycle degree wave 3 ending at that date, it's primary wave 3 ending. And then so on, bringing it down from there. So going forward, what that suggests is that in January of 2022, the S&P completed primary wave 3 of an ongoing cycle third wave. And the October 2022 low then completed primary wave 4 of cycle wave 3. That then suggests that we are in primary wave 5 to complete cycle wave 3. Now, within this primary fifth wave, we are going to be tracking out or tracing out 5 waves of intermediate degree, of which thus far we've gotten waves intermediate 1 and 2 in. And now, what's inside that intermediate third? 5 waves of minor degree, of which we're getting ready, in my opinion, to finish up minor wave 3. So within minor 3, we have 5 waves of minute degree, of which I've now labeled as complete minute 1, 2, 3, and 4, putting us in minute wave 5. So where do we start to look for where all of this could kind of come in? Well, we can start from putting in from primary 1 to primary 4, but primary 1 to this level, it does not work. So I go to the next level down or the next degree down, and that would be intermediate wave 3. And so what I've now put together for us, and let me just bring this down out of that cloud down to just the 3-year weekly. So here again, primary 3, primary 4, 1, 2, and intermediate degree. So as I put in the fib extensions for how far or how high this intermediate third wave may get, I put those in yellow because that corresponds with the color that I'm using to denote a intermediate degree. And then down here, I have the minor degree. There's 5 waves of minor degree within the intermediate third wave. And then inside here, we are in the minor third wave of intermediate wave 3. So we're in that 3 of 3 move. And we basically broke down again. And then minute 1, 2, 3, 4, we're in minute wave 5 to complete minor wave 3. Now, so these remain, excuse me, where the potential for minor wave 3 to get to. And so right now, I'm going to start to bring this in. So this is the weekly, the 3-year weekly. And so we've got the fibs connected. This would be for the height of intermediate wave 3. These would be for the height or the ending point for minor wave 3. And now down here, and I'm going to bring it down so we put this into the picture, I've gotten a fourth wave in, which came at the end of April or mid-April, the April expiration. And so now we have the internal to figure where minute wave 5 to complete minor wave 3 should come in, or we can start to look. So I'm going to bring it down, put it on the daily. So now we're inside this. Actually, go out one more. That's a little bit too far, but let's just kind of go in here. And what we're now looking at is the internals for the minor third wave. There's minor 1, minor 2. Then we have minute 1 and 2, 3, and 4. So as we work our way higher, I'm going to come down one more time. I'm going to go down to the 4-hour chart, and I'm going to open it up because what we're really looking at now, there is minute 3, minute 4. And I'm just going to open this up so we can see deeply inside. Again, cash market. So this big square and the orange is going to be related to the minor degree, because that's the color that I'm using to denote the minor degree. So once we finish minor wave 3 up here, this is going to be where I'm looking for the minor fourth wave to come back. So you can see when we go from this chart, it's a very small little box. And when I bring it all the way down to the 4-hour chart, the box becomes bigger, and then I open it up and it becomes very big. So what now I'm focusing on is this finishing move. This is, let me just show you. Here we have minute wave 4, and that's the correction for the April low, April expiration low. That was at 49.53. So out of there, we're doing 5 waves up of minuet degree, of which, again, I have 1, 2, 3, and 4. So, and I'm putting a question mark here on 3 and 4, because once again, almost undiscernible on anything above like the 4-hour chart. We don't see this very tiny, because here I have the fibs for a fourth wave pullback. And right now, the market has come down. We've penetrated just below 0.236, which would be absolute bare bones minimum. But when I really look at this breakdown inside here for this minuet wave 3, the sub minuet kind of suggests that this is the previous fourth. So this coming down, superseding that, and beginning to touch below here, which does fit for the minuet wave 4. We've come down below it, but yet here is the little box, the little window of the next previous fourth that this didn't fit. So this is actually another fourth wave, but on even a lower degree. So that's why I've kind of put the 4 and a question mark, because if I bring this down and we start looking at this on the hourly chart and we go inside, it does fit ABC, but it could have been, this actually happened after we reached that secondary low and then rallied. So I don't remember how high it had gotten, but it could be 1, 2, 3, 4, 5, and then it's wave A. But right now I can use it as an ABC, and it can be wave 4. And then what we have is the beginning stages of that fifth wave. Now the outside, which is why I put the question mark there, is the fact that it could still be within wave 4, since this really is the window that we'd be looking for as associated by these fib levels. And we'd be looking for it to come in between 0.236 and 382. So this could also be A, B, and we get one more drop down. And then that has the potential to go below this low, which was what, 52, 56, 57, and come down to about the 52.15 level, or in between, because we also have the hourly 200 at 52.28. So leaving that open, that could happen. A little bit longer term then, expectations do remain for the market to again turn and move higher and to complete. So I'm looking for a minuet fifth wave to then turn around and complete. Let me go back out to my 4-hour chart, turn around and complete the minute fifth wave. Right, so if this is complete, and now I'm looking for a minute wave 5 up to, a minuet wave 5 up to complete the minute fifth wave, bringing it back down. Now we can take a look on the inside. So within this minute fifth wave, I've got 1, 2, 3, 4, and now we're inside that fifth, possibly. So now here are fibs that would go along with that minute fifth. Again, color to the degree, minuet, minuet 5. So it's minuet 5 as it's compared to minuet wave 1. 0.618 comes in at 53.40. That may work, but probably not, because we need to get above the high at 53.42. Basically, see, the high is 53.41.88. So the first one really out of the gate would be 100% equality, where wave 5 would be equal to wave 1, and that comes in at 53.92. Now, getting in its way, which also could provide resistance and possibly enough resistance to turn the market down in a minor fourth wave. Because what if we get up to, say, for example, this is 2.618 would be for the intermediate third. It's just resistance. I definitely do not think that that level is going to complete the intermediate third wave. Not when we have right above it for minor wave 5, 53.68. So again, what we're coming up on is the minute fifth wave to complete minor wave 3, and a 3.618 would be where we would be looking to complete. Excuse me. I have to come back out again to the daily. Minor wave 3, we'd be looking for that to complete upwards in that level, right? So I was correct the first time around, and that we're looking at 53.68 for minor wave 3. So the intermediate just going to possibly present some resistance, not be the completion point for intermediate wave 3. Not when we have the completion point for minor wave 3 just above it, but it could complete minor wave 3. So inside this zone, in fact, I would say the zone really could be 53.50 up to 53.70, with an outside look as high as 53.90, 92. Then we get that minor fourth wave correction. And again, if I take it back out and take a look here, then we're looking at this. Because again, minor 3 completes, we're looking for a minor 4 correction. And as Elliott said, the most likely point for a minor fourth wave to find its completion point is within the price territory of the fourth wave of one lesser degree, and that's going to be the minute degree, and that's already in place. So here's our next zone. So up here, we were looking up here and here. Now we got a much bigger, and it's a much bigger zone. But basically, once we get up into here and we can complete it, we do have the potential to turn and to drop back as low as 49.50 in the area in between. It's pretty big. It's 52.68 down to 49.58, I believe it is. Let me just kind of go right there. That's the low. 49.53. So that's a big window, but it's normally towards the terminus, and that would be the endpoint for that fourth wave. So we run that coming back down. So up here, we basically have already reached that just inside this minuet fourth wave. So that's why I'm looking for down here, but I include the whole point, the whole square, so to speak, the range. Now, so what am I looking for from here? We still got a little bit to go. So I'm looking for possibly the completion point for minuet wave 4. Let me come back down to my hourly chart. For minuet wave 4, and if that's the case, then I'm looking for minuet wave 5 to go up to complete minute wave 5, and that in turn will complete minor wave 3. So I'm looking, there's several layers now that are going to finish up in this level. So we get one more high in there, And that should complete minuet wave 5, minute wave 5, minor wave 3. And then we come back down again. And then we're looking for that little bit larger area right in here to put in minor wave 4. Then we go up again. And that's where we'll be looking for the completion point for intermediate wave 3. And then we come down again in an intermediate fourth wave, and then again in an intermediate fifth wave. So we have, as you can see, and this is basis, like I just got to go back out to the weekly chart. 1, 2, 1, 2, 1, 2. So what do we got? 3, 4, 5 of minor 3, 4, 5 of intermediate 3, 4, 5 of primary wave 5. So that is, we got a lot left to do, actually. And we have upside targets for intermediate wave 3, because I do believe that minor wave 5 will break above that level again. And so this would be the next level to come in terms of where can intermediate wave 3 complete. So when we're looking all the way out, we are looking at much higher levels. Now this is under this count where we're in this primary fifth wave. Now we have so much being packed into what could interrupt this whole thing. And there are a lot of things in there that could just disrupt it and break it and drop it. And so I'm going to leave it in this particular count more because of how this is all being presented and how the market is acting up into this level. This produced a lot of bullishness, and it came about because of NVIDIA's earnings, basically. And all of the other in sympathy moves, right? If NVIDIA's does really well, and that's artificial intelligence, and other artificial intelligence associated should move. But in fact, what really is going on is the chip sector, the SMH, that as a sector is moving pretty strongly higher. So there's a lot of things that are all going in based on NVIDIA. Now, there are other things that I think believes just we could talk analysis here, just in terms of that's technical. All of these levels are technical based on an Elliott move and then the Fibonacci levels that go along with each one as it builds and stair steps up as we finish the series of 3, 4, 5, 3, 4, 5. Because if we hit the top of 3, then we get a 4 and another 5. We finish another 3, we get a 4 and a 5, and we finish the last third up into its fifth wave. So then we get a much larger correction, but we still have those stronger ones to go. And each time we get a completion point, like here for this minute fifth wave and the minor third wave, wherever that completes, once that minor fourth wave is done, the minor fifth wave would be expected to break that high and could possibly substantially break that high and then come up to the next level. And then from there, we'd be looking for the intermediate third wave and an intermediate fourth wave. So the intermediate fifth wave would then be expected to come up and break the high of that intermediate third wave to complete the whole cycle. So we still have pretty much, which I think initially I was, September, October, but it could very well go through the end of the year. Now, what could upset this whole action, all of these moves? What could truly upset? Well, if inflation continues to be a real problem, if the fact that the bond market is not going to just relax here and be looking for a rate cut, but if we possibly get a rate hike towards the autumn or even later, that would absolutely just go done, because right now the narrative, and this is what I started to see coming out at the end of last week, the narrative's going to switch to, well, Powell said he'd really like to begin to cut by September, or someone interpreted something he said as that, with that intent. I think the whole world would love it if the United States could start cutting their interest rates and kind of relieve all of this stuff. And then the market would just open the doors and go, okay, there's our reason to rally. So we've gone from earnings interest rates took a back seat. Yep, yeah, we got a problem. Yeah, we know inflation a little bit tough. We had some indicators come out suggesting that inflation, they're not going to meet that 2% target anytime soon. We shouldn't be looking for interest rate cuts until maybe the fourth quarter, maybe December, but now suddenly September, okay, there's your marker. And I'm serious. Now the conversation is that we're starting to bolster back into the stock market based on the fact, well, the Fed's going to cut in September. I think that it's crazy, but because we have no evidence, just suggestions, but that doesn't mean that the market won't power up. But here you have it, folks. If it does, and that's the narrative that's going to supply the movement of capital back into whatever stocks, whatever products, whatever things that are going to be put into place. And we continue to have all kinds of conversations because right now, there's too many component parts within all of this that have to go in sync and kind of contribute their part to helping the market rally. And again, they're not dropping in sync, let's say. So, but that could be very typical. And reaching this topping process is, of course, now either way, whether it's the primary B wave, whether it is the primary fifth wave to finish cycle wave 3, the end story remains the same. The end move, whenever this particular extension of the up move is complete, whether it's going to be a super extended wave B or whether it's going to be a primary fifth wave and the completion point for cycle wave 3, the reaction, the next move will be a strong corrective pattern. And because we're reaching, I'm believing we're going to be getting above 5,500, possibly between 55 and 6,000. Again, those are just very, very early call out to a level. But right now, I've got fibs that do cover us in the current pattern to 54 to 5,500. And that can be seen between now and September, possibly. Now, back to shrinking this back down. I think let's take a look at what we have coming out. Well, let me go over and finish the futures market. So that's the SPX. Oh, let me, before I do that, moving averages. Let me move this out. Let's go back to the daily. We'll take a look. We can see that the moving averages right here are fairly steady, right? The daily, the 50 still kind of on an upward slope, the 200 on an upward slope, the 20 on a stronger one. And here we have, even with that strong down day we had, it only just produced, excuse me, the 13 and the 20 to pause and maybe start to go sideways. But the fact that we came right back on Friday with a solid rally, they just kind of picked it up and started heading higher again. So based on that and the daily, it was definitely not a bullish engulfing. That was more of a bearish, stronger bearish candle. Maybe we get one more leg down. If not, and we continue to go up, then of course the moving averages are going to go. But then I'm looking for this to stay in place as 4, and we're looking for the completion point of 5. Moving averages support either. If it comes back down, then I would expect the 13 and the 20 to go flat and the 13 to go slightly lower, just as it gets ready to put in a low. All right, over in the ES, it's the same picture. So let me go back out very briefly and quickly. Go look here. Here's primary 3. Bring this in. Here's primary 4. Same do. Intermediate 1, 2, minor 1, 2, minute 1, 2. Yep, I know it's big, but let's just look at it. If we can go out and I take a look at as far out as I can get, let me see how far I can get on here. This is intermediate cycle, primary 3, primary 4. We're looking for primary wave 5 to complete that cycle. And lost my train of thought there, so I'm going to go back down to my 4-hour. So we're coming inside all of this. There's where I was. 1, 2, 1, 2, and the size of this, and I can't get out far enough, but I can over here in the SPX. So let me just show you on the SPX. If I go out here onto my my monthly max, I'm all the way back to 1928. And so we have grand super cycle. This is grand super cycle. This is super cycle level. This is cycle level. So in essence, where are we? We're inside cycle wave 3 of super cycle wave 3 of grand super cycle wave 3. And so what we've just basically are looking to complete is the 3 of the 3 of the 3, the third of the third of the third. So this is how I can accept on this larger scale, this being a primary third wave, and we're completing a cycle third wave. Primary fourth wave when we're finishing primary third and fourth to finish that cycle 3. And inside 5 waves of primary degree, and inside 3 waves of intermediate degree. I've had to bring it all down. And yes, I do have some problems, but not with the count, but with the degree. But I'm leaving it, and I'm basing it on the very early. So in other words, I'm bringing some justification, at least in the S&P cash market, to the count being what it is based on the long-term count. So it's a 3 of a 3 of a 3. We're finishing the third of the third of the third. Now that's there. So now I'm going to go back down and I go to, let's go, we wanted to start with, nope, I wanted to start with that weekly. So we're looking at the S&P. So third of a third of a third on a very, very large scale. And now we're inside of the primary fifth wave. We have 1, 2, 1, 2, 1, 2. So again, we finished minute wave 3 before, and now we're looking to finish minor wave 3 of intermediate wave 2 of primary wave 5. So here again, we have on a much smaller level, a weekly level instead of that very long-term monthly. But what we have is 1, 2, 3, 4, 5 of 3, 4, 5 of 3, 4, 5 of 5. So we're just finishing the minor third, and that's not done yet. We're getting there, but it's not done yet. And then we're going to come down in a minor fourth, and we're going to go back up, and that's just going to finish the immediate third. And then we're going to come down again in a 4, and we're going to go back up in a 5 to finish that primary fifth and the cycle wave 3. So these can take some time. And the fifth wave, yeah, well, right now, primary 3 took a long time. Primary wave 5, I'm not going to call it equality because it won't happen. Equality would be a very, very high number. Very, 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 very high number. But let's start breaking it down here on the futures basis and take a look at what we got going on. So that was that weekly. Let's go down to the daily chart. And here again, let me just say, we did actually see this third wave, the minute third, extended, very strongly extended. Then this was just the aftermath. And then now we've got it up, going back up again. And yeah, the extensions are presenting on a cycle basis also. Not that people follow cycles, but a lot of a more stronger and right-hand translation to a lot of cycle troughs. So points where we're looking for the cycle lows to come in are coming in at much higher levels, which continues to suggest that we remain in a stronger uptrend. Now again, minor 3, that is the longest and the strongest out of the whole 1, 3, 5 within intermediate wave 3. So the minute three, the strongest part of the minor third, because that's what it's within. And it is 1, 2, 3, 4, 5. So that whole third wave is going to be very strong. Etc. Also with the um, intermediate. The intermediate third wave is also very strong because of the components within it are pushing. So we have one more stronger push after we reach minor three, come back down to minor four, which once again are going to be right there. So let's start to work through all of that, and then I can put that back in. So 1, 2, 3, 4. We have for our minute fifth wave. So let's go take a look at what that comes in at. So those are up here. So 618 would be 54.55. That's basis the future. That would be 0.618 for where minute wave 5 would be 0.618 times the length of minute wave 1. Now, here is 100%. Minute wave 5 would equal minute wave 1 at 57, 58, 59, 60. From where we are, that's a fairly decent, let's just say 400 points from where we are. And that's a lot. And that just finishes a minute degree. Now, what do we have coming in between? Well, here is the minor third at 53.58. We've been there. And we still need to get a 4 and a 5 to finish the minute, and then a 4 and a 5 to finish the minor, and a 4 and a 5 to finish the intermediate. So I'm thinking we got 53.58, 54.55, 55.65, and then sitting topside 5,600. And that could be just to finish up to minor wave 3. And then we still got that minor fourth wave. Now, once we do begin minor wave 4, here's our window. So wherever this gets to, the window for it to pull back to is going to be the fourth wave of 1 lesser degree, and that would be the minute 4. So this is going to be our window. And I'm just going to stick it in there because, again, we don't know where minor 3 is going to stop, but we know that minor 4 more than likely is going to come down into this zone. So I'm just going to add that right now. So we kind of have our points of reference now right there. And then I'm going to edit this, and I'm going to put the correct color. Now, it's going to be okay. It's going to be pretty bright, but that's the one we're looking at. That's where I'm looking for this to come down to. Don't know exactly. We have our resistance zone, 54.55 up to 5,600. Now, minute 5, 100%, 57.59. That's pretty high, and I think now that basically all of the Mag 7 are in. The last one came out, and they really went after it, and we have to wait and see because we had an expiration on Friday. The next major expiration, of course, is June, and it's already lining up to be pretty big, a large expiration where a lot of money gets settled out. And what that then does is possibly that's where we can look for the minor third wave high to come in about mid-June. Now, also on a cycle basis, for the S&P 500, the futures market, and likely the spiders as well, we have a cycle trough, but it's a shorter term cycle. It's like a midpoint cycle that should find its trough or the cycle low last week of May into the beginning of June. Now, we're seeing a lot of things come in early, which gives a stronger right-hand translation to that cycle in terms of might have already been in. Now, we know for the one previous that was due at the end of April, came in mid-April. So that kind of shifts that next, right? It swung up, now it's coming back down. So basically, Mid-May, well, we just did that. We just had the May expiration a week ago. So again, is it going to fall back into the cycle? Coming back down into the next trough? Yet to be seen. So again, placing all that in together, but the June expiration is going to be a larger expiration and have a lot more market power, let me say. Today, or last Friday, the market power came via NVIDIA's earnings 2 days prior. So what can I say about coming into next week? I'm still looking for all of this to unfold. Same conversation gets out there. There are too many things that could just cut this off immediately and for it to come tumbling down. Now, yep, that's going to wreak havoc, but I would fall back on what I'm now looking at as, well, that's the alternate, which is that primary B wave. Because again, while we're looking for this high in the minor C, how it comes out of that is really going to tell us a lot. It's either going to be, okay, we finished that primary B wave and we're in a primary C wave. Again, that's if I'm using a count that shows that the cycle third wave completed in January of 2022. And I've just gone through a whole discussion about why it likely did not. But here's what if we need to see. If we get a hiccup in here, if we get something that drives the market to go like, okay, brakes are on that, it's risk on again, which is going to be a huge shift in where premium is going to be. If we see a sudden increase in the VIX and volatility back in the VIX versus the underlying volatility, it's going to shift, and it's going to shift capital. And what could cause that? There are many, many different factors that could go in and upset that apple cart. And we also have some important cycles yet to kind of reach the highs or even start to trough. So again, right now, I am going to be basically looking for a continuation to the upside. If we get a sudden break, let's just kind of go down to the hourly so we can see a lot of these levels. Let me go back out, but I can open it up. I can open this up so we can see it. If something were to upset the apple cart, then really what I would be looking for is for the market to do a nosedive. So all of this rally, we're going to be hard pressed to find strong support. There's support, but strong support, a level that's been tested, a level that really, stood the test of time. And actually above 5,000, what have we had that stood the test of time? 5,000, 1, 2, 3 times. Okay. No big deal. Not like it was there, because above 5,000 was all new, and it's still new all-time high, new all-time high, new all-time high. That was one little hint of how quickly we can turn the market. All right. And this is the response, which means, okay, 4. Here I have not put it in because I'm leaving it open again. Is it the 4 or is it ABC? And we're going to get a 4 down into here, which matches with this. That matches the color. Okay. So there's the support zone. Here are the fibs for a larger minuet fourth wave. So again, that leaves open. If we continue higher from here, if we actually do break, let's just say if we break above 53.50, we're getting stronger signals that we're going to make it above the next 8 points and start heading up towards 54. Then we got other stuff, and I'm not going to mention it because too many of you guys get upset, but there should be resistance at 5,400. All right, now let's go take a look at what's going to come out that may or may not support anything next week. So first of all, Monday is the holiday. So it's Memorial Day holiday in the United States. The U.S. markets will be closed. Starting on Tuesday, we have 4 Fed officials that'll be out speaking. This is their new thing. They're out. We have 2, the Cleveland Fed and the Fed president and a Fed governor. They're going to be in Japan speaking on Tuesday. We have the Case-Shiller, the S&P's Case-Shiller Home Price Index at 9 a.m. We have consumer confidence at 10 a.m. That's Tuesday, May the 28th. And then the rest is all airtime filled by Fed officials. On Wednesday, we have the Fed Beige Book plus 2 Fed officials out speaking. Thursday, we start to kind of go back towards more delivery of inflation type data, or what influences it. We have initial jobless claims. We have the first revision for the first quarter GDP. Those are all at 8:30 a.m. And then we have advanced U.S. trade balance, retail inventories, wholesale inventories, all at 8:30 a.m. on Thursday, May the 30th. Pending home sales at 10 a.m. And then it is Friday, May the 31st, that we get to end the month and look at personal income, personal spending, PCE, the index, and then Chicago Business Barometer. Now, the bulk of that, PCE and personal income and spending, come out at 8:30 a.m., 9:45 Chicago Business Barometer. That could put a little jar in the market. Right now, because we've been still in earnings, I've been waiting, for the bigger players to put their earnings out. It has held the market higher, even against receiving more negative data towards where interest rates might move. All right, so that's going to be it for today. Now, being that the markets are closed on Monday, the next Elliott Wave update, or just the next daily technical update, will be, excuse me, on, let me just double check. Let me just tell you, it will be on Tuesday, May the 28th. Have a great balance of the weekend. Have a great holiday weekend, folks. And I'll be back on Tuesday.